Hi, I'm Elliot from Free Life Financial, and today I'm discussing my top 5 tips for buying a house, whether it's moving or buying your first house, and getting a mortgage in the UK. So let's get started. Tip number 1 is to be prepared. That means things like check your credit report, make sure there are no negatives on there that could negatively impact your mortgage application when you come to apply. Payslips, do you have access to your payslips? Lenders are going to want to see them, so make sure you've got them ready. And bank statements, one of the most important parts. You want to show good financial conduct, so make sure all direct debits are paid on time. Make sure you try to keep gambling to a minimum. If your statement just shows Sky Bet, lenders might have a problem with that and could decline your application. You also want to try to show that you are spending less than the money that you've got coming in. That shows you can afford the mortgage, and ideally stay out of your overdraft if you can. For that same reason, if you're in an overdraft, it can make it look like you're struggling month to month and could mean you're less likely to be approved. Tip 2 is to work on your credit. I already mentioned that in tip number 1 because this part's very important. So if you check your credit report, firstly, make sure you're registered on the electoral roll at your current address. That helps to verify your identity. Also, credit utilisation. So if you've got a credit card with a £1,000 limit, try to keep your utilisation, your usage, as low as possible. It's important to use it, but to keep the usage low. So for example, 10% of the limit would be ideal. If you've got a £1,000 limit, try to spend less than £100 a month on your credit card and repay it in full every month. It's really good for your credit score and it'll help you avoid paying interest. If you have a credit card with a £1,000 limit and it's at £990 usage, then that makes it look to the lender like you're struggling and you're using all of the credit you can get. That doesn't look good on a mortgage application, so try to keep your credit utilisation as low as possible, and if you can repay your credit card in full every month, absolutely do so. If you find any negatives on your credit that you weren't aware of, you'll want to put them right. So if you find out you're a month behind on a credit commitment and you weren't aware, then bring that up to date because that could have a significant negative impact when you come to apply for a mortgage. And finally, on the lead up to applying for a mortgage, try to avoid taking out any new credit agreements if you can. Tip number 3 is to work with a mortgage broker, but I'll keep this one short because I'm biased because I'm a mortgage broker. I do recommend working with a mortgage broker. They might charge you a fee, but in my opinion, it'll be worth it. And that's because they're going to walk you through the whole process. They're going to explain how everything works. And of course, it's their job to get you the cheapest deal possible. And they could save you a lot of money. But again, I am biased. So that's tip number 3. Tip number 4 is to save for more than just the deposit. If the deposit for your property is going to be, for example, £10,000, remember that you will need more than £10,000. You might pay stamp duty, which is tax that you sometimes pay when you're purchasing a property. You'll need money for solicitor costs. If you're selling and buying, you'll pay more in solicitor fees because you're paying for 2 transactions. But even if you're only buying, you'll still need money for solicitors. And also, if you're selling a home, you'll need to pay an estate agent to sell the home for you. And then other things like removal trucks and furniture, especially if you're buying your first home, you might need to buy everything, all of the furniture, televisions, beds, etc. So try to work out how much you're going to need to save. But remember, you will definitely need more than the deposit alone. Tip number 5 is to get a mortgage in principle in advance. As soon as you are going to start your property search, you need to get a mortgage in principle because firstly, that's the only time you can really know how much you can afford. A mortgage in principle it's a pre-approval and it tells you how much you could be approved to borrow. So you need to know that for you to know what kind of properties you can be looking at realistically. Also, if you find a property and you make an offer, often the estate agent will ask if you've got a mortgage in principle and they might ask you to provide that to them. So it's important to have that. The worst thing is to fall in love with a property, not be prepared, not have your mortgage in principle, and somebody who is prepared beats you to it and you lose out. And they are my top 5 tips for if you're planning to purchase a property in the UK. But if you've done this before and you've got any other tips that you'd like to share, then please feel free to leave them in the comments. Thank you.